Hello fellow traders. Today we're going to walk through how a very small group of very large stocks can move the entire market, even when most stocks underneath are acting just fine. Today we're going to focus on recent price action in mega caps like Nvidia, Microsoft, and Apple, and show how they first pressured indices and then helped drag them off the lows once they caught a bid. Today we're going to get into how mega caps quietly steer the market by a pajama trader. Let's get into it. Setup, breadth versus index. In early 2026, the market breadth improved meaningfully, with the majority of S&P names participating to the upside. Small caps and mid caps showed strong momentum, signaling a broadening rally beyond the Magnificent Seven. Yet, the cap-weighted index, S&P index, and NASDAQ often looked weaker when mega caps were sold for rotation. Under the surface, the breadth has actually been pretty healthy. A growing percentage of S&P stocks and a big chunk of small caps and mid caps are trading above key averages and participating in this move higher. But when you look at the index itself, it hasn't always reflected the strength. Why? Because the biggest names are where the gravity is actually at. When investors rotate out of mega cap tech and into smaller and cheaper names, the indices can look heavy, even though most stocks are green. Mega caps pressure the indices. Investors have been harvesting profits in mega caps like Nvidia and Microsoft and Apple to fund a great rotation into small caps and cyclicals. On several sessions, these few names have applied a disproportionate downside pressure to the S&P 500 and NASDAQ despite positive breadth. The result is that indices appear weak or flat, while the average stock actually traded well. Here's where the distortion comes in. As 2026 kicked off, institutions started rotating out of stretched mega caps into small caps, industrials, financials, and other laggards. That's rationale portfolio management, but it creates a very specific look on the tape. When you have 60 to 70% of the stocks trading higher on the day, yet if Nvidia, Microsoft, and Apple were all down 1 to 2%, the headline indices look tired or even negative. Feels like a bad market day, but it's really a mega cap. Reversal in the mega caps. Catch bid. On several days, semiconductors and big tech led sharply in intraday reversals, with Nvidia acting as a key leader. As Nvidia and key semis peers improved, the S&P and NASDAQ lifted off session lows or flipped from red to green. The same concentration that magnifies the downside pressure also magnifies the upside once the flows turn. This concentration cuts both ways. The same mega cap stocks that dragged in early on the day became a lifeline in the afternoon. A familiar pattern seen has been open weak, breadth descent, but the indices sink as mega caps sell off. Then as the day progresses, buyers step back into Nvidia and the semiconductor group. That improvement in just a handful of names is enough to pull the S&P and NASDAQ off the lows, or even push them green, despite the modest changes everywhere. The message: you can't really understand the intraday action without watching these giants. Why Nvidia and semis matter so much. Nvidia's market cap and AI leadership position make it a core pressure point for the sentiment and index direction. Semiconductors have led the early 2026 momentum with strong volume and sharp swings, amplifying their impact on the NASDAQ. While AI and semiconductor names trade well, risk appetite improves and capital often rotates back into growth, lifting the broad indices. Nvidia and the semiconductor complex sit right at the center of the AI story. Because of the size and their weighting and their narrative importance, the market reads them as a real-time signal on risk-on appetite. And when those names are heavy, it feels like the entire growth trade is being questioned. And when you see that in indices, it's tough. And when those names firm up, it's like someone flipped the switch on the risk assets. Money flows goes back into growth, momentum sieges and re-engage, Well, momentum strategies re-engage, and S&P and NASDAQ respond almost immediately. If you look at this chart here, you'll see you got the S&P index as a whole, and underneath you'll see the sectors: real estate, industrials, energy, financial services, tech, consumer defensive, consumer cyclical, utilities, basic materials, healthcare, communication services. And when you look at that, you'll see that real estate looks to be the leader for the day. But when you look at the S&P as a whole, it's barely up. Not even, I guess you could say flat or down 0.1%. But then when you look into the sectors themselves, then you'll find out what's really happening. So when you look at the tech sector, which is XLK, you'll see that it's up 0.1%. And then when you look at the stocks beneath it, you'll see they're listed by the largest holdings to, the largest weightings to the lowest weightings. Nvidia, Apple, Microsoft, and Broadcom sit on top, as well as a few others. But the top three together are about 30 to about 40% of the market. So when you look at Nvidia, you'll see that it's down 0.4%, Apple's down 1%, but then it gets evened out because Microsoft's up just about 0.7%, along with some help from the smaller ones like Micron and IBM, and also Oracle and Liam. So when we looked at those sectors, we saw, in the tech sector, we saw that Micron was up 7%, which was like the leader at that time. And looking at the chart, it looks like it made a nice little run. And then the next one that was up in that sector was IBM. And it was up slightly, but today it sold off as the time of that we're talking about this on the 20th of January 26. But as of Friday, it was up. And so then now we look at the, and this sector weight on these things, IBM, Micron, are not as big as Apple or Nvidia or Microsoft. So even though those stocks were up, it didn't really move the sector. As you saw, it was only barely up like 0.1%. But then look at the heavyweights that were moving a little bit bigger. So we'll look at Nvidia, and you'll see that it's not doing so well for the year. And it's basically just been fading once it kind of double topped in these areas here. But yet, the sector itself was up. Now we'll look at another heavyweight in there, Apple. Also, never really made it back to the highs, but yet it's taking the markets down with it. Because if you look at let's just look at the SPY. The SPY is kind of the same thing. It hit the highs and just been fading off. So is it running with Nvidia because Nvidia is the larger market cap? I mean, you would think that they have the same kind of charts. So how do you unpack this? Well, the large caps are the ones that sort of set the pace on this, and how they move determines on how the markets move. So looking at the large caps pre-market and probably at the open will give you an idea on one, how the sector's going to do, and if it's going to keep the markets up. What this means for traders. Traders should watch the breadth and mega caps together, since strong breadth combined with weak mega caps creates noisy indices but constructive tape. Intraday, Nvidia and key semiconductors can be treated as control stocks for potential index reversals. Positioning and risk management should always respect how a few names can dominate profit and loss, even with the broadening market. For active traders and allocators, these are 3 specific takeaways. First, don't let indices trick you. If the breadth is strong but mega caps are heavy, think rotation rather than risk off. Second, intraday, treat Nvidia and a few other key semis as your control panel. When they pivot, the indices tend to follow. Third, in risk management, remember that even in healthier, broader market, your P&L can still be dominated by how you are positioned in a handful of giant names. Respect the index and respect the index gravity, and you'll read the tape much with more context. Thanks again.